My name is Ram Dhamija. Welcome to my channel. Today is 24th of August, Sunday, and I'm here to take you through the updates about our markets and how they are going to behave the next week. So the last week has been tough for us. The markets have corrected a bit. We have broken 25,000, which was a key level on the downside, and FIs have again began to sell with huge numbers. So that is not a very good news, and the market has been under pressure. The open interest has worsened. It has again become 0.6. So this relentless FI selling is not stopping, and our markets have been continuously going down. I had made a video yesterday about the Fed's decision to cut rates, and that is going to have an impact because, as you can see, that gift Nifty shot up by almost 100 points plus due to that news, and the world markets reacted in a very positive way. So that's one good news. So gift Nifty is indicating 25,000, but whether we are going to sustain at that 25,000 or not is anybody's guess. But the market was under pressure. Let there be no two doubts about it. It was, you can say, a consolidation phase also, because after the run up, but there is one very critical key signal that we need to watch out for, which I'm going to share with you in today's video. So let's begin today's video with the Nifty chart. So this is the Nifty chart of Friday. As you can see that we opened somewhere around the 25,000 level, but we were not able to sustain it at all, and we kept on sliding down, and finally the close was at 24,869. So we broke 25,000 decisively. And if you look at the daily chart, now this is a very important chart. Let us spend some time on this chart. As you can see that there was a huge gap up which happened on 18th. This was due to the GST cut rate, and the market went to about 25,124, and from there we have come down to 24,800. Now I had previously also maintained that until unless we cross this level of 25,645, we are making a pattern of lower lows, lower highs. Okay, so this we went from 25,600 to almost 24,300. That's a 1,300 point correction. So the first low is made. Now we try to make a high. Now if we are able to make a high higher than this 25,600, then good. Then we are continuing with our higher high patterns that we had started from April of 7th. So you can see over here, April 7th, when this rally started, we made we have been constantly making higher highs and higher lows. So 24,600, then we made a low of 23,900. This was India Pakistan war. Then 25,100, then we made a low of 24,400. This was Iran Israel conflict. Then we made 25,600, but this time we broke this last Iran Israel low. So this is a worrying sign. Are we making lower low, lower highs pattern? If that is the case, that is basically validated by this, because we have not been able to cross 25,600. For a higher high, higher low pattern, 25,600 was needed to be crossed, but it is not crossed. We have reversed from 25,115. Now, if let's say after this Fed news and all, we start rallying and we cross this 25,600, great. Then it will basically mean that we have cleared the last high and we are back on the higher high, higher low pattern. But if we are not able to do that and we reverse from here, then we are breaking 24,355. The chances of 24,355 breaking have become very, very high. So that would mean the next low of 23,900 opens up. So this is the setup that I wanted to discuss with you. It is not a very good setup that we are seeing, and the Fed news that has come in might provide some relief, temporary relief, but we will have to see whether this is a permanent relief or not. But if it is not, if we break Friday's lows of 25,000 or 24,800, then we are going down, and then we are going down in a hurry. So it's not going to be very good news if this continues, and I suspect a lot of it has got to do with the US tariffs that have been imposed on India, and that is playing a big overhang on everyone. Though there has been so much of good news that has come in, there has been news that has been there on India getting a BBB rating. There has been a news on GST cut. There has been a news on 12 financial institutions upgraded by S&P. So there has been a lot of good news. but none of it is being digested by the markets, and markets are continuing to go down. And my sense is it is primarily because of this US tariffs tensions that are there, because that is just refusing to go away. So until unless that thing gets resolved, the markets will be under some sort of a strain. Now let us look at what the FIs have been up to. So FIs have been on a selling spree. So as you can see over here, they have sold 25,751 crores month till date, and DIs have pumped in 66,000 crores in the month of August, and yet our markets have not gone anywhere. So that's a worrying sign, and they continue to remain short. So if you look at the FII future short positions, they are still at 89% short. So they have a long of 354 contracts versus a short position of 1.94 lakh contracts. That's a short percentage of 89%. Whereas if you look at retail, they are long. Retail is long almost 60-65% with 2 lakh contracts long. So FI is a hugely short and retail is hugely long. Now we will have to see finally which way does it pan out and how does it go. But FIs are in a very negative mood right now. And if you look at what has been the performance of our markets, so Friday everything was down. Metals, banks, FMCG, financial services, all were down 1%. Only thing up was India VIX. If you look at 1 week, autos was up because of the GST cut, MNCs was up, and so on and so forth. But if you look at basically YTD performance of our indices, the best performing ones have been financial services, autos, banks. A lot of the rally in autos has come in the last 2-3 days, but otherwise banks and financial services have been leading this recovery, and the underperformance in this has been from IT. If you can see, a minus 18%. IT is down, pharma is down, so anything to do with exports has been down and under pressure. And mind you, right now there is no sanctions or there is no tariff on IT services or pharma. Still they have been underperforming, and our currency has been going down against the US dollar. Still they are underperforming. So that shows the headwinds that are there, huge headwinds that are there. Small cap has been down year to date, but they have recovered in the last 1 week, and so has been mid cap. Mid cap has been mostly flat, and they have been performing well. If you look at Nifty, last 1 week it has gone up by 1%, and YTD it is up by 5%. But 1 year, if you see, Nifty has been flat. So Nifty has given no returns over last 1 year, and it is basically a good time, when markets have not given a return for rolling over last 1 year, 1.5 years, 2 years sometimes. It becomes a even much more better opportunity to invest, and that is where I maintain that if you are a good investor, then you will continue to invest, and that is where I also help people. If anyone is interested in making their mutual fund portfolio, they can reach out to me through the Google form in the description box. I help people make very solid, robust mutual fund portfolio. So if you're struggling to make your own portfolio, or even if you have a portfolio but want to get it evaluated and see how that can be bettered, you can reach out to me by that form, and I will get in touch with you, and we'll have a discussion on how to streamline your portfolio, how to make it better, how to look at enhancing returns, how to look at improving risk of your portfolio. Because for retail, I firmly believe, and I've been maintaining this, that mutual funds is the way to go. There is no other way. Don't try to get into direct equities which you don't understand. Don't try to get into speculative businesses if you don't understand. If you're not a full-time trader, you should not burn your money. Though I am a full-time trader and I've been profitable for the last 5 years, consistently profitable, but that has happened after I turned professional. So if you have a day job, you should avoid that kind of speculation, because a lot of people come to me and they say that we are losing money in options, what should we do? I tell them to stop, because if it's not your profession, then there's no point. Investing is much better. You'll make long-term sustained wealth for yourself and your family, and even if you start small, you can actually make it big. So if anyone is interested in that mutual fund, creating a mutual fund portfolio, they can fill up the Google form in the description box. So coming back to the markets over here, this has been the performance of Nifty. Last 1 year, it has been flat. And in my opinion, it's a good time to, start slowly investing. Now, let us look at the open interest in the markets. The open interest, there were about 9 crore calls that were added in Nifty. That's huge. 9 crore calls were added, and about 2 crore puts were added. And if you look at the open interest, right now, the open interest is at 0.61, which is very negative. It's very bearish. 19 crore calls versus 11.6 crore puts. So mind you, this is a truncated week. Wednesday is a holiday, and the PCR is 0.61, which is not so good news. So there is huge resistance at 25,000. We will have to see how it opens on Monday and whether this is cleared or not. Looking at the straddle prices, there was no decay on Friday in spite of it being a truncated week. So the straddle is firmly at 230. It opened somewhere around 226 odd. So we are pretty much there where we opened. So there has been no decay in the straddle prices that are there. So the markets were looking very, very bearish on Friday. The news has come out over the weekend of the Fed going to cut rates on September. That should cheer up the markets. That had definitely cheered the world markets. That had definitely cheered gold. I had made a video yesterday. If some of you have missed it, you can check it in my video section. I had made the Fed's impact on the other asset classes, how it is going to impact and why is it going to impact. So you can check that video over there. But the mute point being that our markets are in some sort of a bother. Whether this Fed decision is good enough to propel the markets higher remains to be seen. We will come to know in the next 1 or 2 days. But if it is not able to, for whatever reason, and the market starts correcting, then we are looking at a deeper correction, in my opinion, and I might be wrong. But in my opinion, the charts are telling that the open interest data is telling that the FII selling is telling that the FII net short positions are telling that. So all the indicators are that if the market fails to clear 25,600, then we are looking at not such a good phase and we might be headed lower. The best case in that case would be that, you know, we consolidate around the similar levels, 24,500 to 25,500. That will be the best case then in that case, if we are unable to clear 25,500. But the chances are when a lower low, lower high pattern kicks in, then, you know, you are looking at breaking perhaps 23,900 also. That will not be good. It will be very good for investors because it will give them an opportunity to accumulate, but it might not be so good for the markets in general. So that is my hypothesis, that is my prognosis, that is my analysis of the markets over this weekend. Do share what do you feel about the markets. It's nice to read your comments, and please do subscribe to my channel. And as I had said, if you are interested in building your portfolio, please fill up the Google form in the description below, and I shall get back to you. So that's it from me now. I hope you enjoyed the video. I shall connect with you soon. If there is any other important update, I shall be there. You can follow me on my Twitter handle as well. And that's it from me now. Take care. Have a nice weekend. Bye bye.